Hey guys, in today's episode, we're going to talk about 4 pillars of successful trading. Welcome back to the Trading Coach Podcast, guys. If you guys are brand new, my name is Akil Stokes. I am a Forex trader. I'm an investor and entrepreneur and host of the Trading Coach Podcast. I'm also a trading coach over at Tier1Trading.com. And this is a podcast I put out 3 times a week, not only sharing my journey as a trader, right? My continuous growth from novice and rookie trader to wherever I end up in the future, but also taking the time to answer and address any questions that you have and really provide insight on trading, insight on entrepreneurship, insight on self-development, a handful of issues, because as we know, trading and life kind of go hand in hand. And today I got an interesting question on social media. By the way, if you don't follow me already, make sure you do so. At Akil Stokes RTM. Watch out for the fakes. If someone that looks like me DMs you, it is not me, but feel free to follow me not only on YouTube search Akil Stokes, but Instagram, Facebook, Twitter, and TikTok, where I put out a whole bunch of cool content. And don't be shy about reaching out either. But I had a trader reach out to me and said, hey, good day, bro. Trust you're doing good. Thanks for all you do for the trading community. I have a question, and I hope you don't mind. Of course I don't. So I'm trying to build metrics for myself in trading so I can know my strengths and weaknesses and how to improve on them. My question is, what are the most important skills all consistently profitable traders have? And I thought this was a very good question. Not only is it a very good question, but it's a very good practice to do, right? When this trader says matrix, basically he's creating like a scorecard. So he's grading himself on different elements. So, you have the different elements of trading and he's trying to figure out, hey, am I, just for example, a 5, which means I'm great at it, or like a 1, that means I'm, pretty poor at it. And once he is able to see these grades and determine what his grades are in each category, he can then lock in and focus on where he needs to develop and where he's lacking, right? We do this a lot in business. When you create a business, you want to do an overall kind of audit of that business and see what is helping the business, what is hurting the business, where are we doing good at, where can we be doing better at, where are we lacking at, and then you make the proper adjustments and either bring in the people that are going to strengthen that part of the business, or in some cases, you may be cutting that part of the business out and exporting it somewhere. And I thought it was cool in trading because there is a massive amount of information out there about trading, and it's very easy to become confused. At the time of recording this, we're in the middle of a workshop, the Truth About Trading workshop. You guys will be hearing this after it's over, so I apologize, but make sure you stay in the mix. That way you can catch the next live workshop we do. But we were talking to a group of traders this morning, and I was telling them about how to properly learn, how, you want to be here for the live sessions, you want to ask questions, and you want to go back and review it, and then you want to take notes. And, the path that most traders take is you watch a YouTube video and you go to the next YouTube video, and then you go to the next YouTube video, or you listen to a podcast and go to the next podcast and go to the next podcast. And that is not really learning because you're not retaining anything, right? When you hear something and then you go to the next thing and then you pay attention to what you learned the next thing, you forget what you learned before, right? You got to go back and practice and practice and practice. And this is a great technique in doing so. And the question is, where do I start? What do I need to practice? Do I need to find a strategy? Do I need to start with the basics of price action? Do I need to read a book on trading psychology? Do I need to do this? Do I need to do that? And I think this will lay out kind of the 4, in my opinion at least, most important categories that we need to focus on if we want to be consistently profitable traders. Now, understand that within these categories, right, these are kind of umbrellas and there are smaller little categories underneath it. But I think if we had to focus on 4 categories, and I was trying as hard as I can to make it 3. I'm a big believer in the rule of 3s, and as human beings, it's much easier for us to comprehend things that are in 3s, that are in 4s. But I wanted to make sure I separated 2 of them purposely because they are 2 different things. But the 4 categories that I would decide on are 1, technical analysis, 2, psychology, 3, risk management, and 4, money management. I'm actually going to make a little change there. Let's just call it analysis for the first one because I don't want to kind of separate technical and fundamental analysis. Again, I don't want to, I am a technical trader, but I don't want to seem like, hey, you have to learn technical analysis and fundamental analysis is trash. I don't want to make it seem like you have to learn fundamental analysis and technical analysis is trash. Hopefully by the time you start learning as a trader, you've come to the decision on what you want to focus on, and whatever that analysis style is, technical or fundamental, that's the one that you're locked in on. But technical analysis, we'll stick with this for the example. Technical analysis is important to learn because it allows you to read the story that the market is telling you. It allows you to interpret the behaviors that the market's participants have done and are doing. It allows you to develop a strategy. It allows you to test a strategy. It allows you to see if that strategy has an edge and tweak that strategy, right? It gives you the tool needed to consistently extract profit from the market. And obviously technical analysis is more than just finding a strategy. That is the end game. It starts with learning the basics, right? We started this morning with the basic principles of reading a candlestick, understanding strength, understanding momentum, understanding the ebbs and flows, trend, consolidation, Dow theory, right? It starts with the very basics of that and then building up to strategy development, whether that's you creating your own strategy from scratch or whether it's you finding a strategy in a book or an internet and you kind of tweaking it and modernizing it and making it your own. Now, when we talk strategy, we're not just talking, price action strategies. This could be indicator based, right? You can use a MACD, you can use moving averages, you can use stochastics, you can be, ADX, you can be fully automated, right? I do think and you'll get this from coders as well, if you want to be a master of indicators, you still need to learn price action because price action is what causes the indicators to do what they do, right? Indicators print based off of price action. So the more you understand price action, the more you're going to be able to interpret your indicator and kind of find the hidden ways to use it that really give you an edge, right? Spoiler alert, the common ways of using an indicator typically don't work too well. You have to be creative. But mastering technical analysis is going to give you all of that. And that is a very important part of your trading because, again, without a strategy, right, you don't have a tool to extract profit from the market, at least on a consistent basis. Category number 2 is going to be psychology, right? I said it this morning in the workshop. Easy formula to remember. Consistent analysis plus consistent execution equals consistent results, right? We kind of go over that backwards, right? We want consistent results. That is the end game. We want to be consistently profitable traders. Well, consistent analysis is one thing, but here's the thing. You can be the greatest chartist in the land, but if you can't consistently execute, you're not going to reap the fruits of your labor, right? If you have a great strategy that has a great profit factor, right? But if you consistently make mistakes, if you enter too early, if you get out too early, if you get out too late, right? You're going to sabotage your trading and it's going to be pointless, right? That is like having a great team with a bad head coach, right? You can have, it's World Cup time around when I'm recording this. You guys will probably get it, hopefully. I don't know when I'm going to put it out. Maybe sometime in the World Cup. And hopefully the U.S. men's national team is doing good. But as I said in the podcast from November 20th, we have more talent than ever on our men's side here in the U.S. More talent than we've ever had. We've got more players playing in the top leagues around the world. Bundesliga, we got Premier League, we've got Champions League champions, right? However, up until this point, and I hope I've been proved wrong, we've got a coach that believes in his system over working his system around the players. So we've got this great strategy, if you want to label the players as a strategy, but we have a coach that doesn't know how to use it correctly. And because of that, we're losing to Saudi Arabia and Japan and stuff like that, right? It's pitiful. Again, hopefully that's not the case by the time you guys hear that, but that's how it's been recently. So if you don't have your psychology mastered, your mind state, if you don't have your discipline, right? If you don't have all of that mastered, you're not going to be able to fulfill your strategy. So working on trading psychology isn't sexy, isn't pretty. No one wants to talk about it. It's the boring stuff. I've told you guys this story. When I first started getting coaching, the first thing I got, I thought I was getting the strategy. I was all excited, and your mouth all drooling, fingers all wiggly, heart all thumping. And the first thing I got was like a 40 or 90 page document on trading psychology. And I'm like, I got to read all this. He's like, if you're serious. And I read it all. I didn't like it, but I read it all. So analysis, psychology number 2. The next one is going to be risk management. And this kind of combines the other two, but risk management is important. And believe it or not, it would seem like common sense, but most people don't pay attention to risk management. What is your risk in comparison to your reward? What are your trade management or active trade management protocols? If a trade is going your direction, how do you handle that situation? If a trade is going against you, how do you handle that situation, right? What is your contingency plan? What if the internet goes out? Do you have someone to call to get your position off the board? What if you're not able to get a stop loss on? How do you handle those situations? Risk management isn't just kind of the X's and O's on your chart. It's just not, hey, I placed a good stop loss and I placed a good entry. It is being able to handle that and adjust in real time. And it's also handling kind of the contingency plans of your business, right? How do I know when to call it quits? What type of drawdown is an allowable drawdown? If worst case scenario in the world happens, who do I call? What do I do to stop my situation from getting worse, right? Risk management is important. Hopefully, at least the latter, you never use that part where you've got to make that call and tell your broker to get me out of all my positions right away. It's a little bit easier now since most brokers and charting packages are on mobile. But I remember back in the day, I've had situations like that where I had to call up and said, hey, my computer blew up. I didn't have a chance to put a stop loss on. Just take me out of everything. Take me out of everything, broker. I just don't want to take that risk, and that is very important. The last one is going to be money management or position sizing strategy. Now, again, this is very close to risk management because they do kind of overlap, but specifically with your money management strategy, if you're going to implement something like that, that can be the biggest difference maker in your trading. Now, a lot of people just do a set risk amount, and depending on what your strategy is and what your goals are, that could be the optimal way to trade, meaning that, hey, I'm only going to risk, 2% per trade or 1% per trade, and it's a constant fixed percentage risk, right? If that's the case, you don't necessarily need a money management strategy, at least part of it. But if you're someone that wants to accelerate your wealth, if you want to make the most out of your trading and make the most profit possible while staying safe, right? Because there are ways you can do this where you are very risky, but while staying safe, I would recommend implementing or at least researching a position sizing strategy. Right? Personally, I use smooth ratio money management. And what that does is it allows me to increase my position size based on my performance, but it does so at a rate that I'm not increasing too much. So, for example, let's just say that I start off by trading one lot, right? I get to a certain point in my equity curve, I make some profit. Now I graduate from trading one lot to two lot. Make some more money. Now I graduate from trading two lots to three lots. What happens in kind of a fixed ratio money management position sizing strategy is you get to a point where your account size increases so much that instead of going smooth like 1 to 2 to 3, once you get to like 5, this is just an example, you go from 1 to 2 to 3 to 4 to 5, this smooth increase, then all of a sudden you go from trading 5 lots to 8 lots. And then all of a sudden you go from trading 8 lots to, 1.3 standards or something like that, 13 minis or something like that, for example. And part of you is like, man, that's awesome. I just upped my position size by blah, blah, blah. I skipped the level in the game. This is all good. I'm making more money. But what we need to remember is that the more we are trading, right, the more profit we could potentially make, but the bigger losses we're going to take as well. And one thing about trading is this, at least in, I'm consistent over time. I'm streaky. So I'm consistent macro, streaky micro, meaning that my macro results are pretty consistent. I make the same thing year over year for like the last 10 years, right? It's been pretty much the same aside from a few outlier years, some positive, some negative, not in the negative, but below my expected return. But as far as like the week to week goes, the day to day goes, I'm pretty streaky, right? I'll go 7 losses in a row followed by 10 wins in a row. Like it happens based on market conditions. And the thing is this, right? If you go 10 wins in a row, right? And on that 10th win, it gets your account size to the point where you can drastically increase your position size. You go from, 5 to 10, right? You're increasing your position size right as the odds say that you're probably going to hit a losing streak, right? Because everything tends to even out and revert to the mean. So now you're trading your biggest position size ever when the chances of you losing are greatest. You just do the math on that. So having a smooth ratio money management position sizing strategy allows you to avoid those big jumps. It smooths it out some. It's not going to eliminate the fact that you may increase your position size into a drawdown, but there's a massive difference between going from 5 to 9 and then hitting a drawdown versus going from 5 to 6 and then hitting a drawdown. So position sizing strategy is very important. Another part of position sizing strategy as well is how you pay yourself or how you grow your account, right? What is your plan for taking money out? Again, this is a business. How are you going to pay yourself? Or how are you going to grow your account? Are you trading with 100% of your available equity? Or have you started with 25% and after 3 months of consistent growth, now you're going to add another 25%, so you're 50. And after 3 months of consistent growth, now you're going to add another 25%, so you're 75. Then after 3 months of consistent growth, now you're going to add your full allotment, right? Are you going to do something like that? Or are you going to take money from your regular job? Maybe you save a certain amount from your regular job each month. When do you add that? Do you add it at the end of each month? Do you add it as soon as it comes in? Do you add it at the end of a year, a quarter, right? This is an investment, right? There are many different, it's kind of weird because trading is a long-term and a short-term investment. It's short-term in the fact that as a trader, you are kind of day-to-day, week-to-week, you're in and out of positions in the short term. But long-term, the ultimate goal is growing your account. And growing your account just doesn't come from your trading results. It comes from your normal kind of personal finance plan as well. Just as you should have an allotment or a plan that says, hey, I save this much each month, or I put this much in my housing account, or this much in my beach trip account, vacation account, whatever. Like how you divvy up your money is up to you, but there should be different places that your money goes, right? If you have an investment account, and maybe it's a separate investment account where you're dollar cost averaging into the S&P or something like that, or maybe you're aggressively growing your trading account and saying that, hey, I'm going to take out 10% of each paycheck, and I'm going to put that to the side, and at the end of the year, I'm going to flood another couple $1,000s into my trading account as I get better at trading, so that way I can produce more and have basically a faster growth. So there's, again, many levels. I'm not supposed to get into all the details of it, but those are the 4 that I would say are going to be most important: analysis, psychology, risk management, and money management. Let me know if there's something I missed. Let me know if there's something that you value. Let me know if there's questions about anything within those categories, right? This Trading Coach podcast is for you guys, and I like to say by you guys, because the questions that you guys ask allow me to create these topics. So find me on social media at Akil Stokes RTM, or on YouTube. Leave a comment underneath this video if you have questions. Hit me up in the DMs if you have questions, and you never know. I will respond to you personally, I know that, but it also might become the next episode of the Trading Coach podcast. All right, see you guys. Real quick before you guys go, do me a favor, like, rate, and review this podcast. That is an awesome way to support. We've been growing this podcast for the last, I don't know how many years we've been doing this, but the growth has gone up and up and up every year, and we're consistently rated as one of the top Forex and top trading podcasts out there in the world, which is awesome, pretty cool. So keep it up. I want to keep growing. Rate, review, subscribe, follow, whatever it is you need to do. I appreciate your support in advance, and thank you.